In recent days, the world has been rocked by shocking headlines. President Trump warning of nuclear threats and unprecedented military posturing. Markets are trembling, and fears of global chaos are intensifying. But what does this mean for the crypto world? Are we heading towards disaster, or is this the dawn of a new financial revolution? Today, we're diving deep into the chaos. Trump nukes crypto. Here's what will happen next. Stay tuned as we explore the shocking events, the hidden opportunities, and what the future holds for decentralized finance in these turbulent times. Let's get started. It all started when President Trump announced the deployment of nuclear submarines to the vicinity of Russia, emphasizing words like aggressive and nuclear in his rhetoric. Such statements aren't just bluster. They threaten to ignite a geopolitical fire that could have catastrophic consequences. Naturally, markets reacted accordingly. Bitcoin, stocks, and traditional assets plunged, reflecting fears of instability and global conflict. On the stock market front, Coinbase, a giant in the crypto exchange sphere, experienced a brutal decline. Its stock plummeted from a high of around $445 to roughly $310, a loss of over 30% in just days. This massive correction was driven not only by broader market weakness, but also by Coinbase's recent Q2 earnings miss, which further dampened investor sentiment. But beneath the chaos lies a critical question. Is this a moment to panic, or an opportunity to prepare for the next phase of growth? Seasonality and historical patterns in Bitcoin. While the current environment appears bleak, historical data provides some reassurance. August has traditionally been a rocky month for Bitcoin, often marked by declines. A quick glance at Bitcoin's past Augusts reveals a pattern of blood-red months, with most years experiencing significant drops. However, notable exceptions exist, particularly after Bitcoin's halvings in 2013, 2017, and 2021. In those instances, the month following the halving saw net growth, suggesting that current weakness might be a temporary correction rather than the beginning of a bear market. This pattern hints at a broader cycle, one where short-term dips set the stage for explosive rallies. While the current dip could be painful, it may also be an ideal entry point for long-term investors, especially given the historical tendency for post-halving months to turn bullish. The key is to remain patient, disciplined, and prepared for what comes next. Bitcoin's thin moves and market reactions. Analyzing Bitcoin's recent price action, we observe what traders call a thin move. A rapid, steep ascent from around $106,000 to $117,000, with minimal resistance. Such moves often precede retracements or consolidations as the market seeks to fill in the gaps created by rapid rallies. Historically, similar thin moves have been followed by retracements, sometimes quite substantial, before the next leg up. Expert traders like Crown from Crown's Crypto Cave have predicted potential dips below the prior all-time high, around $106,000 to $108,000. If Bitcoin respects key support levels, such as $112,000, there's a high probability of a bounce and continued upward momentum. Conversely, losing this support could trigger a sharper correction, offering both risks and opportunities. For traders, this presents a crucial decision point: whether to short the market if support breaks or to buy the dip if support holds. Platforms like Blowfin, which offer risk-free trading bonuses and zero KYC for US residents, provide tools to capitalize on these volatile moves. However, trading always involves risk. Proper risk management and experience are essential. Why this turmoil could be a catalyst for innovation? Amidst the geopolitical tension and market turbulence, a profound transformation is underway. Regulatory agencies like the SEC are actively engaging with crypto projects, signaling a clear shift towards mainstream acceptance. Recently, SEC Chair Paul Atkins announced the launch of Project Crypto, an initiative to modernize securities rules via blockchain technology. This move indicates a push to replace legacy financial systems with decentralized, transparent, and efficient alternatives. The implications are enormous. Ethereum, often called the world computer, stands at the forefront of this revolution. Its blockchain is increasingly being recognized as the foundation for a new financial era, one where traditional services are replaced by decentralized finance, DeFi. Major institutions, from BlackRock to hedge funds, are eyeing Ethereum as the trust layer capable of handling trillions in assets securely and efficiently. The power of DeFi and the regulatory green light. This regulatory clarity and technological advancement could be the catalyst that propels DeFi from niche to mainstream. Projects focusing on decentralized exchanges, yield farming, and cross-chain interoperability are poised to benefit. As an investor, understanding this shift is crucial. The next few years might see a wave of innovation where traditional financial products are tokenized and traded on blockchain platforms with regulatory approval. One notable example is Athena, a DeFi project that has shown resilience and growth during turbulent times. Its recent performance indicates that even amidst market declines, quality projects with real utility can outperform expectations. For long-term investors, this is a signal to focus on projects with solid fundamentals and clear regulatory pathways. Institutional adoption and the August seasonality. While macroeconomic factors and geopolitical tensions dominate headlines, institutional players are quietly accumulating assets. BlackRock, Fidelity, and other giants are increasingly involved in crypto investments, viewing the current dip as a long-term buying opportunity. Michael Saylor's MicroStrategy remains committed to accumulating Bitcoin despite short-term volatility. Rumors suggest that Saylor is exploring innovative financial engineering to continue his Bitcoin purchasing spree, signaling unwavering confidence in crypto's future. August's seasonality pattern, historically bearish, might just be a typical correction within a longer bullish cycle. After a strong July, often a bullish month, markets tend to retrace before resuming their ascent. The key is to interpret these dips not as endings, but as necessary pauses before the next upward surge. The black hole phenomenon. In the midst of market chaos, one project stands out for its explosive growth: Black Hole. This DeFi protocol has seen its total value locked, TVL, skyrocket in recent weeks, crossing $260 million in TVL in just over 2 weeks. Its revenue generation is parabolic. Daily fees are hitting new highs, with over $200,000 in revenue per day. Black Hole's innovative design acts like a gravitational pull, absorbing liquidity from various chains and protocols, much like a cosmic black hole. Its tokenomics incentivize users to burn and lock tokens, which in turn fuels the protocol's growth and revenue. This creates a virtuous cycle. More TVL leads to higher fees, which benefits token holders and participants. Embracing the chaos and building for the future. The current geopolitical and market turmoil presents a paradoxical opportunity. While headlines scream nuclear threat and markets wobble, the underlying technological and regulatory trends point towards a new era of financial innovation. The convergence of institutional adoption, regulatory clarity, and groundbreaking DeFi projects like Black Hole signals that this is not the end, but a new beginning. For long-term believers, this period is a chance to double down, buying the dips, understanding the macro patterns, and positioning for the next wave of growth. Whether it's holding through turbulent times or actively trading short-term moves, the key takeaway is resilience. The path ahead may be fraught with uncertainty, but it's also filled with unprecedented opportunities. So, stay informed, stay prepared, and keep your eyes on the horizon. The next chapter of crypto's story is just beginning. Stay tuned for more updates and strategic insights. Remember, in chaos, there is opportunity.